Under the double entry accounting system, each transaction is recorded in at least two accounts. One account will be debit, another account will be credit. So, what is the process of determining debit credit? Here we can see assets, expenses or losses, and drawings. These three items is considered debit in accounting, and these three items, if they increase, they will be debit. Again, I am repeating: assets, expense, losses, drawings. These three items, they are debit. If they increase, they will be debit. On the other hand, if these three items decrease, they will be credit. Again, here we can see another three items: liabilities, revenue, gain or incomes, and capital. These three items is credit. If they increase, they will be credit, and if they decrease, they will be debit. So liabilities, revenue, gain or incomes, and capital. These three items, they are credit. If they increase, they will be credit. If they decrease, they will be debit. So debit item become debit when they increase. Asset, expense, drawing, they are debit. They become debit when they increase. On the other hand, liabilities, revenue, gain and income, and capital, these three items, they are credit and become credit when they increase. So now we would like to discuss about some assets. So here in the first stage we can see current assets: cash, inventory, accounts receivable, which is presently known as trade debtors, notes receivables, prepaid expenses, accrued revenue, supplies, deferred insurance, short-term investment, etc. So these are some examples of current assets. Long-term assets. Here you can see equipment, furniture, fixtures, land, building, car, vehicle, plant and machineries, long-term investment, air conditioner, etc. These are some examples of long-term assets. Now we are going to see some examples of expenses. Here we can see salaries and wages expense, travel expense, rent expense, miscellaneous expense, advertising expense, supplies expense, depreciation expense, insurance expense, interest expense, utilities expense, maintenance and repairs expense, property tax expense, cost of goods sold, operating expenses, freighting, freight out, purchases, rent expenses, traveling, conveyance expenses. These are some examples of expenses. What is drawings? Anything taken from a business by its owners is considered as drawing. So anything taken from a business by its owners is considered as drawing. So now we are going to see some examples of revenue. Here we can see sales revenue, service revenue, fees earned, interest revenue, commission revenue, etc. Now we can see there are some examples of current liability: notes payable, accounts payable, which is presently known as creditors, and salaries and wages payable, interest payable, unearned revenue, short-term loan, accrued expenses, property taxes payable, etc. These are some examples of current liability. And we can see there are some examples of long-term liability here: mortgage payable, long-term loan, bond, debenture, etc. So what is capital? Capital is cash or other assets provided into a business by the owners. So anything given or provided by the owners to a business is considered as capital. So we have seen some examples of assets, expense, drawing, liabilities, revenue, and capital. So all of those items, these assets, expense, and drawings, they will be debit. If they increase, they will be debit. And on the other hand, if these assets, expense, drawing decrease, they will be credit. And on the other side, liabilities, revenue or gain or incomes, and capital, these three items, they are credit. If they increase, they will be credit. If they decrease, they will be debit. So assets, expense, drawing, debit, increase, debit. Liabilities, revenue, gains, incomes, capital. Credit will be credit if increase. These are the you have to keep in your mind that it's very easy. This three item debit will be debit if they increase, and the other hand, this three item credit will be credit if they increase. Thank you.